The IRS just announced tax changes that will affect almost every American. Your paycheck, your investments, and even how much you keep when you retire. And the crazy part? Most people have no idea this is coming. So let's break it down fast. 1. Standard deduction changes. First, the standard deduction is going up in 2026. This is the amount you subtract from your income before paying taxes. Single filers, $16,100. Married couples, $32,200. Head of household, $24,150. If you're 65 or older, you get even more. Single, plus $1,650. Married, plus $2,500. Plus a special bonus for seniors, an extra $6,000. But it phases out if you make above $75,000 single or $150,000 married. This means many seniors will pay way less tax in 2026, but younger earners? Keep watching. 2. New income tax brackets. Now the part everyone cares about, your tax rate. Your income gets taxed in layers, not all at once. Here's the new structure for 2026, after deductions. 10% bracket up to around $12,400. 12% bracket up to around $50,400. 22% bracket up to around $105,700. 24%, 32%, 35%, 37% for higher incomes. So what does this mean? If you're in the middle class, the IRS is quietly pulling more of your income into higher brackets. Translation: some people will pay more without realizing why. 3. Capital gains are changing too. This part is huge if you invest. Capital gains equals taxes on profit from stocks, real estate, crypto, etc. For single filers in 2026, 0% if gains are under $49,400, 15% up to $545,500, 20% above that, plus an additional 3.8% tax if your income is over $200,000. For married couples, 0% under $98,900, 15% up to $613,700, 20% above that. Here's the crazy part most people miss. Capital gains stack on top of your regular income. If your income jumps a little, your capital gains tax can jump a lot. 4. The gold and silver trap. This is something very few people know. Gold and silver are not taxed like stocks. The IRS treats them as collectibles, like art. That means you don't qualify for the 0% or 15% capital gains rates. Instead, your gains are taxed like regular income, but capped at 28% max. If you're investing in metals for 2026, this matters a lot. 5. Bonus insights, value add. Here's where things get interesting. The 2026 tax changes happen because the 2017 Trump tax cuts expire. This isn't new policy. It's the old system returning unless Congress acts. Millions of middle-class earners will experience bracket creep. Inflation pushed incomes up, but the bracket adjustments are not rising fast enough, meaning more income equals higher tax bracket, even if you're not richer. High-income investors might shift strategies, because in 2026, Roth conversions become more attractive. Tax loss harvesting becomes more important. Capital gains planning becomes essential. The IRS is increasing audits for incomes between $100,000 to $400,000. This is officially announced. 2026 will be the first year the new audit expansion fully hits. So yeah, 2026 is going to be a big tax year. Some people will save money. Some will lose a lot more than they expect. If you want to protect your income, your investments, and your retirement, you need to understand these changes now, not later. Want a breakdown of how much you will pay under the new system? Tell me your income and filing status, and I'll run the numbers for you.